Alrighty, good morning. This is Mike from ABC123Trader. I'm going live today, and I'm just going to be going through some of my indicators because I'm getting questions on the Discord for templates and etc. And I'll be putting them up on the Discord. But first of all, I have to always do any live session or any video. I'm just going to switch to the risk disclaimer. Remember, just make sure to trade your own money that you can afford, because trading can be very, very risky. So with that being said, I'll let you read this, and I'm just going to go through some of the indicators. If you guys, any of you do come online, feel free to put in the chat, and I will answer any of your questions. Okay? And I'll be back in 1 second, and I'll start this up, and we'll go through some of the indicators one at a time, from minute to Renko to uni Renko, T-bars, etc. Alrighty, good morning, everybody. And whoever's going to watch this video in the future, if anybody does come on this beautiful Saturday, I'm in, as you can see, I'm just in my on my porch here. And what we're going to do is, the screen that you see is an example, but what we're going to do is I'm going to transition into my other chart in order for you to understand what I am doing here. Okay? So what we're going to do is I'm going to just show you one chart at a time, and we'll just go through one indicator at a time so you can understand what type of indicators I have, because on the Discord group, and you know what I'm going to do here, so you can understand. If you guys didn't go to the webinar, if you guys did not go to that webinar, what you can do is you can go to that Discord group, and I'll just pop it in there if I can. It's not working anyways. But join the Discord, and I can put the link up there, and you can try the indicators for free. But what I'm going to do is I'm going to go through one indicator at a time here. You guys can ask any questions, like I said. So what I've done now, it's not on my, there is actually a folder called ABC Trader, or what Trader. I have this on my trading laptop. I didn't move them up there, but it doesn't really matter. But what we're going to do is we're going to start right from the 915, and we'll work our way down. Okay? So object trader right here. I'll have to do that later. So we'll start on the 915. What is the 915 indicator? What happens is when the market is volatile first thing in the morning, and what I do is, what we want to find out is a certain range within that area, because between minute 9 and minute 15, within that area, 14 to 15, you'll notice many times the market will start vibrating, and then it will kick off. Because you have to realize, majority of the trading is done by computers now, so they try to sniff out the news to see what these guys, or what the big market makers are planning to do. They'll look at volume, order flow, etc., etc. So what I try to do, and I set it for 9:30 in the morning. My computer is always set for New York time, even though I don't live in New York. I just find it easier. Once I adjusted that, it's much easier for not only for teaching, but also just to stay within whatever the news and what the New York session is. So I have it set up right up here for 9:30 in the morning. And what you can do, and I just leave it as is. Okay, so as soon as I hit apply, what you'll notice are range boxes. Okay, I'm on a 5-minute chart, so let's go to a 1-minute chart, for example. Okay, so on a 1-minute chart, market opens at 9:30, and you can see how she's vibrating up and down, up and down. So from minute 9, somewhere around minute 9 to minute 15, it tries to figure out wherever that range is. And what you'll notice, here's your box, your line in the sand, and this is actually just a Fibonacci 61.8 pullback on this side, 61 for that pullback, so it depends which direction if it does pull back in the zone for interest. I am a Fibonacci lover because it's proven it works very well. So, and then what happens is, majority of the time, depends what the vibration of the market, you will notice once you break out of the box, all right on. I hope you got Moss Incredible. Okay, hello Moss Incredible, welcome to the channel. Remember, I'm going to be trying to educate you guys on indicators. If you have any indicators that you're interested in understanding, I'm doing this today for it, and I'm going to be doing one indicator at a time slowly. So if there's certain ones that you're really interested in, certain charts, we're going to work on this. So the one I'm doing right now is the 915 indicator, what the methodology behind it. So it doesn't mean you use all the indicators, it depends how you trade. And this is why I wrote this, because when I was trading, I had to learn myself. And I found there were different techniques from different instruments, etc., etc. When I was building this, I mainly used it for the NASDAQ, but YM, NASDAQ, ES, they're all the same. It doesn't really matter. So I'll just get back to it, but on the 915, what I do is between minute 9 to minute 15, I will record the range and it automatically draws this box 24 hours in advance. But now what I want to show you on methodology is why it's so important. This yellow candle, which is live, this is from here to here is 26 pullback. So this is actually helping you to understand where your risk is. So what will happen many times, it'll bounce down. A lot of times it will actually come back into the box, and you can literally almost put a limit order here. Or you can use it as a breakout and continue down. And as you can see, she moved all the way down today. But the interesting thing is, if I crunch this chart, where the 915 was yesterday, look where the 915 is today. So you can actually use it as an original target. Okay? Now let's go back one day before. This one broke out, see the 915, and we had a previous 915 coming down, tapping down in this zone. So we know we can see what they're going to do, and once we break out, away we go again. Over and over and over again. So you have different zones of interest. And before, like this is an example, which this is actually a better example of what I want to teach you guys about, because when we do have chop days, look at that, even this one is hitting perfectly, I love it. Okay, when you have chop days like this, you have to, figure out your risk versus reward. 915 comes in, and you can see we're fighting, and then, we're trying to figure out if it's going to work. And depending on your methodology, if you're using moving averages, etc., once we break out of the box, we can make a few ticks. But as you can see, the nice thing about it is 8 ticks here, 8 ticks, 4, 9. It's actually showing a lot of areas of support and resistance. So if I take a small rectangle, for example, when you get choppy days, I'll just do it to 14 for now. It did break down a little bit more, plus candle patterns. You can see this is an area we have to stay away from until she starts breaking through, and maybe I might have to take a trade from there. Okay, that's one of the indicators, the first indicator I want to show you. Now let's go to we're going to go to the ATR zone panel and fib zones. This one was introduced to me actually by Isham, and he's on my Discord. And because I always get other traders, so can you, try this out, try that out, see how it works. And what I'll do is I'll back test, and if it works well, then of course I try to put it into the indicator arsenal for all traders for us to become consistent. Now it all depends if you can be a conservative trader and wait. Now the key is what this bar up top And what that bar is the panel right here. Okay, you don't need it, but what this is showing different time frames. 1 minute chart, 2 minute chart, 3 minute chart, 5, 10, 15, 30, 1 hour, 2 hour, 4 hour, 8 hour, 1 day, and 1 week. So what you'll notice is you'll notice where the energy is, and when I switch charts, you'll see what happens. So the key with Isham, when we were looking at it, the key is you want to wait. What I always call pullback entries. I find out if I can get to a pullback in this zone 3, this is the area you really want to get into a trade. And sometimes you don't even get a trade during the day. But at 9:30, see how it kept on going up and up and up and up till 10 o'clock and then comes down? Here's our zone of interest right here. And I created this little dotted line right here. See if I can open it up. Possibly as a limit order, and then you can adjust this as a stop. So what I mean by that is on the ATR fib zone, here we have the Fibonacci numbers again, 68, 78, 86, and 38. And so this would be 61, 78, or maybe this is 88 and 61 or whatever. And what we do for your stops, right here, stop entry limit, I said 20 for ticks. Let's see if I go 10, and I hit apply. Have you noticed? Now this is a 10 tick from here to here for risk versus reward. So you know it basically tells you in the line in the sand, this is how much I want to risk, and this is where my entry is. When we're doing 1 to 2, 2 to 4, or whatever, for your ratios over and over and over again. So when the trend changes, we're trying to get up to this zone, and guess what? This would have been an area we'd try to figure out. You can see she's failing. This is the end of the day. And so on trending days, this can work extremely well. See, here it would have been, oh, that's 8 o'clock at night. You're an Asian session person, try to get in this zone. Away you go, and you got your run. Okay? Now, when you see 1, and you see these Zs or Zs, this means we're entering a zone 1. So on a 2-minute chart, let's switch it from a 1 minute to a 2-minute chart. What you'll notice, as you can see, we're currently in zone 2. See? Zone 2, Z2. If we go to 3 minute, yep, we're in zone 1. So it all depends what time frame you're trading. So you can start saying, well, these things are whipping out like crazy, you know, and changing. Okay? And so that's how the ATR fib works. So like I said, I don't know how you guys trade, and you can always ask questions on the Discord, put it on the chat. We can figure out different templates, and we can go from there. So the next indicator I'm going to show you guys, we're just going to go down the list here. We'll remove those. The baseline. And the baseline, how it works, and we'll switch this later. How it works, I'm going to go to a 1 minute chart too. Very simple. Stay out of the cloud. That's how I have it set up. Some days you get chop, and you can see where the support and resistance is. But once you break out, there's your trade. Come back in, touches the cloud, away you go. Touches, enters the cloud, away you go. Your color code is actually my sports team colors, but you can change your color coding any which way. And as you can see, it trends much slower. This is a 1 minute. What happens if I go to a 5 minute chart? It's your 5 minute chart. Breaks out, away we go. We're inside the cloud. You can see the chop. We stay away. We try to make a few points, stay away, and you can see what happens over and over and over again. What happens if I go to a 15 minute chart? Well, there's your breakdown on 15 minute. So once you break out of this, away you go. Break out of here, away you go. Over and over and over again. Okay? That's as simple of an indicator that I try to create. And how this cloud is formed, and I'm going to go back to a 1 minute, for example, here. These circles are circles of interest, such as the same way as like the 915. It will show you down. See about 4 ticks. From as soon as you break up the line, there's 4 ticks. Break out a line, 5 and 6. So you saw 3 groupings here. Minimize the risk to maximize the reward. So that's what I said in my webinar over and over again. Then what you can do, which I was showing you on the webinar, using volume profile. And so I'm just loading it up just really quickly. Let's see, 1, 2, 3. Let's say right to there. Yeah, it's still in that zone. Create a horizontal line. So there you go. You can see where our target is from point A to point B, such as going from top to bottom, 93 ticks. From 11 o'clock to 11:30, half-hour trade for $500. I like it. Okay, it is a more volatile. It's getting, finally, the market's starting to get sort of rhythm. So I'm kind of happy again. And so, in the indicator itself, what we have is, if I'm on a 1-minute chart, if I just use the chart time frame, which means this cloud is going to change quite a bit here. Much tighter, as you can see. See? Some people like more so for scalping. I don't personally. What I try to do is I try to look at slower time frames. So here, let me just put this back here. I'm going to turn it off here. Let's go back here. I'm going to turn this off. I'm going to go to 15. Okay, now you're going to see something totally different. Boom. Oh, it's different. So what that 15 represents is actually probably an hour-and-a-half chart. It's a long time frame to do analysis on a 1-minute chart that we're trading in. So the cloud will be different. So what I try to do is, like I always said on the example, is if you look, if you're sitting, I'm sitting outside and I see a jet flying in the air, you know, at 40,000 feet. I see which way it's projecting. But if I was on the runway watching it take off too fast, so imagine this cloud is that jet stream of that little cloud stream that you see in the jet, and it says, okay, that's the direction they want to go. And once we get out of that jet stream, we can take our trade. Then we get out of all this noise, That's the key. Okay? The baseline, I use it quite a bit on my charts. I have multiple charts that I use. Okay? Now I'm going to get out of that one. I cannot show block scanner until I have live data. I can't show bounce back. I can show buy-sell activator. Okay, let's go to buy-sell activator. The buy-sell activator, what I use, I wonder if I changed that in the update. What we do is we're comparing notes on from indices to an oil chart. Okay, so if I hit apply, hopefully it'll work. I might have to turn on my data here. Let me connect to my data in order for it to work. Card expired. Oh, we are in January. So what we're gonna do buy-sell activator. Let's go to February of 21. There we go. Okay, so with the buy-sell activator, what I'm doing is, I believe oil is king. We've been to more wars because of oil in this past century than gold, of course. Everything is run by oil, basically. Saudi Arabia for years. Now the United States is becoming oil independent, so it's becoming a little less volatile. But oil is still king. Factories, everything is run by oil. We produce everything by oil. Cell phones, everything, you name it. I was in the oil and gas industry. So basically what this is, and you can turn off, you know, the options of these lines, is crossover points depending on trend. And this is an area where they're trying to signal for you to get into a trade. So if you're having a difficult time to get into a trade, as soon as this crosses down, you can take that all the way down. You're seeing it spike back up, even from there to there. Oh, that's actually a good move. 109 points. And now, you know, if you know the energy is going up on trend, cross over the green line. From there to current trending now, we're up 221 points. That's how simple this indicator is. So if you go from YM to, let's say, a NASDAQ, here you go again. And this one's actually following it all again. So, and the key is once you start seeing like little whips like this, pop, 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 and you start getting used to the indicators, then you can start taking these little shorter trades, make your few points each time. If you know the market's going up, then you see that this is a morning drop off anyway. So you see it drop off, boom, peak bottom, come back up, over and over and over again. Now, if you trade oil, it looks like it's flatlined. Okay. So what you have to do, I always say, well, because we're comparing notes, now we go to a NASDAQ chart, hit apply, and away we go again. That's how simple it is. And so now, if I'm on an oil chart and you're seeing it cross over from here to here, we've got our trade going up. And as you can see, on oil at $10 a tick, boom, till, wow, that was a good move. So you got 83 cents or $830 on one contract. That's how you use, this is how you use the buy-sell activator. Okay, now let's go to the next indicator. If you guys have an indicator that you're interested in, just tell me, guys, because I know there's a few of you on there now. Okay, so what I'm going to do is one of my favorite indicators for a long time ago. It's called time scanner. Okay, now what is time scanner? There's actually 3 indicators that I data mine. The 3? Yeah, 3. I'm going to put on 2 of the 3 right now. Market scanner, time scanner, and I'm going to switch this to a simple moving average for 120 for now. I'm going to hit apply. You're going to see what's going to happen. And I'm going to switch this to, let's say, an entry chart. And let's go to data series. 15 days. Okay, perfect. Oh yeah, because we had that holiday 7 months. Okay, anyways. What the time scanner will do, yeah, and it's the weekend, so I can't show you the future times right now. What the time scanner does is, as you can see, 1310 here, there's a buy signal, goes up. Red, sell signal. It's supposed to go down, but we're in an uptrend, so you try to avoid it. And what you do over and over again, there are trading times that were data mined to see which direction it's going to go. And if you notice, as you can see the top of the swings, when they're in harmonics, you can see they are working majority of the time. And then there's kickoff points. Check that one too. But, and this is how you do it. And then sometimes you're going to say, well, you know, Mike, this is way too many signals. All you have to do, I'm on a 1-minute chart right now. Let's put it to a 5-minute chart, 5-minute analysis. And let's just do this. Done. Now, there's one time, a lot less. So this is, of course, is a failed trade, risk reward, we're out of trade, whatever. Maybe you made a few points, but you can see it's trending up. 755, this one took a long time for it to kick in. Once it kicked in, you made your points here. 925, you know, it's first market open, so you really have to watch what's happening. 10 o'clock, away you go. What I do, actually, one of my favorite analysis is I use a 1-hour chart. I'm going to show you something. And this is the ones I like doing for if you're going to be taking one position for a long time. I take a 1-hour chart. Let's say I'll use the NASDAQ. And then what I'm going to do is I'm going to turn that off, of course. And I'm going to put the baseline on. Let's give it some time here. Do I have enough data for baseline? No, I have to increase this. Let's go 60 days because I'm using a 1-hour chart. There we go. Beautiful. Oh, double reversal. That's kind of crappy. But what I will do, I will look Oh, and then one more thing, if you want to look for more times, because when I was doing it before, my computer was weak. There is hours to look back here option. And if I just add a couple more zeros, you'll get all the times here. Weekend. Okay, so perfect. And what I tried, wow, there's the Nasdaq's been ugly. What you try to do is, if majority of the time, if you're above the yellow line and you see a buy signal, I'll take this trade there. See it inverted here? I also have this for analysis later. But what you'll do, let's see if I can find it on the YM. I'll check different markets to see which one's more harmonic. So for example, the 1700, that would be my trade. 4 o'clock, I will not take that trade for going down. What I'll do is actually I'll put a buy above this time, and hopefully it goes. If I'm if it's incorrect and it goes down, I don't care. If I'm on an uptrend, okay? If I'm on a downtrend, let's find something that's really, I want to find a really good time. For example, here's 6 o'clock. 6 o'clock to 1 o'clock. It doesn't look like it's much, but 8 points in the middle of the night isn't bad. I want to find it during the day though. I want to find one that's really, really good here. We just haven't had much because it's the stupid election and it's just been too noisy lately. Here's a perfect one. 10 o'clock in the morning till 5 or till 3 o'clock in the afternoon. I'm above the line, 10 o'clock, hit that thing and away I go. So ruler, once again, take your buy-in till 3 o'clock, away you go. 25 points on the ES, amazing. So, but now I digress. I'm going to go back to a 1 minute chart so I can show you. Actually, you know what I'll do? I'm going to also show you something else here. You don't have to use, if you're, let's say, a uni-Renko chart, okay? And I'll do that. And what I'll do, I don't know how many days of data I have on this. So 15. Okay. And then what I'm going to do, I'm going to go back to the time scanner. It should work here. There you go. Even on uni-Renkos, you will have times on your chart. So see, 10:25 was supposed to sell off. It finally took until 12. 12 was supposed to be a buy, and she finally kicked in. 12:59, you gave us some time watching it. Came down. It was a very tight market. But what you can see, it can work. And so at 15:55, with that deep retracement coming down, that would have been a good move. Plus 4 o'clock going up. Over and over and over again. And you know what? Like I said, you will have time or failing times, but you watch to see what happens, and you can take it the other way, depending on energy and everything. And now, what I'm going to do is I'm going to show you. I'm going to go back to a minute chart because a lot of people trade on time. But we can use Renko, uni-Renko, range bars. So I'll go back to a minute for now. On ES. Let's go to Ryan again. I cleaned that chart up for now. And what I'll do, turn it off, some indicators, remove this, and I'll remove the baseline for now. Now, I'm going to get into the market scanner. Okay, so what the market scanner will do, what you have to do, and it takes some practice, and once you get used to it, you'll understand. The key is to look for longer time frames. So from here to here, or 1 till 2:30 here. This is actually still is that a short time frame? Yeah, it is. Still, it's long enough for this example. That when you get to this time, you watch what price action happens. So at 1 o'clock, as you can see, look how she's hitting it perfectly till about 2:30. So what I'm going to do, so you can see it. See 1 o'clock, right here, there she goes. it's going the opposite direction. This was last week's market performance, so it just inverted. So if I switch it like this, try it again. There we go. See, that's how the market was performing. You see how that spike and this spike is correlated? And it was coming down, and this was coming down correlated. See, I tell you, the markets are rigged. But what you'll notice is when you use that time, you can say, okay, we've got from 1 o'clock to 2:30 maybe a move. And if it goes correctly, away we go. That example, so 2:30, something right around on that drop down, 134 ticks from 1 in the morning to 3 in the morning. And then from 2:30, we have to see what's going to happen. Then she dropped off. So they inverted again to this time. But as you can see, look at this, 3:38. There's a peak. A peak on 3:38, you know something's going to happen. 4 o'clock. Look at this, perfectly right on the bottom till 6 o'clock. Look at that time, long time frame. Once again, boom, 6 o'clock, 183 ticks. Isn't that crazy? And this is just data mining. We're data mining the markets. We're finding out how these guys do these things. And the reason why I designed it was I was trying to stay away from chop. So this area, even though it took off, the majority of the time, this is actually a chop zone. It will just get ugly. I gotta find another area where it shows a lot of times. Actually, NASDAQ might show up better. They can get a lot of choppy times. So right here, see how it's just like this? Look at this. All these times. So you know you're going to get into a choppy, ugly day. So we say, you know what? We'll wait until 1352 till 1521. See what happens, which direction it wants to go, and away you go. Boom, boom, there. 157 points, guys, on the NASDAQ. I like it. So these are some of the indicators that I've created. Like, remember, I've been doing this for I don't know how many years now, and because, like I said on my webinar, I wasn't the greatest trader. I'm still not the greatest trader, but I'm consistent. And the thing I had to learn from myself was patience, and I don't have much patience because I'd like to get my trade done, half hour, walk away for the day. But it took me a long time to sit back, drink a cup of coffee, watch, and then all of a sudden I'm finding, wow, you don't really actually have to trade that much to be very consistent. Now, the next indicator I'm going to show you. So let's get rid of that. If you're a patient trader, this is actually a really good indicator. I love this indicator if you have the patience. I'm going to switch it to 10 minutes. And my partner in crime, Jose, he likes using it on the E-minis. He says, I just put one in and I'll let her run. Okay. And I'm going to use specified time frame. So what I'm using 1 minute chart, but I'm analyzing a 10-minute chart. Okay. Now look how nice Fibonacci's will work here. If I actually see my chart, I don't know why it's going crazy like that. 15,000. Let's see. What is it doing about it? Go figure. Let me switch it to let's see what that means. Oh, something's going crazy. But anyways, there we go. What if I hit focus? What's this? Have an indicator on that? Oh, really? Focus on that. What the heck happened? Scan. I think it's the market's closed for the day. That's why it's doing this crazy thing. Let's crunch this right down. Let's try something here. Let me turn this off for now. See what happens. Then we'll do a projection later here. Yeah, it's the markets are. I have no live data feed. That's why it's doing this hiccup right now. Interesting. I'll check my back data. Let me do one more thing here. I know what I can do. Oh, I'll just scale this off. Okay, make mine. Oh, never mind. We'll have to show you the syndicator later until I get the live data. I don't know why it's doing that. Son of a gun. But what the day trend will do is it actually finds you a really good area for pinpointing trades. And you know what? I might actually have it on this other chart here. And I don't know why it's not showing it. Perfect. I'm going to drag over this chart. There we go. Perfect. I don't know why it's not showing on the other one. Okay guys, what the day trend is you have a green and you have a red background. Okay? What the day trend does is once it turns red, we're saying the market's going down. Okay? The market's going down. And what we do, if you're a retrace trader, see this white dotted line? Right here? See how it just changed and comes right back, right to touch this white dotted line? That's your limit line order. So you have opportunity 1, this band opportunity 2, this red yellow band deepest retracement opportunity number 3. So imagine you're just sitting here, is the market going down? Oh no, I'm missing the trade, and then it comes back. You enter here. Being patient enough, I always said retrace trading. Take the trade. You're literally on the line. That's me. I love it when it does that. There you go. 259 ticks. We didn't even have to think about it. Isn't that amazing? When the trend changes. Now let's take a look at the other one. Let's go from the previous one before. Hopefully we have enough days. Wow, there we go. Now did it work? And if it doesn't, oh yeah, because we're way ahead on the cloud here. So what we do is we try to get into the zone, and if it doesn't happen, it doesn't happen. If we get close, that's the question. Really close. Look how close we were, so close. So yeah, you'll have to take a grain of salt on that one. And many times, it never touch. Oh, come on, come on. We had too many support and resistance levels here. Okay, let me see if I can go to. Let's try something here. I want to see if I can get more days. And then what I'm going to do is I'm just going to go to another chart here. It's going to look a little uglier with the green and some of the bars, but the main thing what I want to show you is will it touch the line? Yeah, you can see we were so close on that one. Let's check the one before. This one dropped right away, so yeah, you're not going to get that one. And see, they take off too. There are two trades that we do. Is there's one that you can't see the line, but I'll show it to you. But here's another example. This one, touch the line, continuation. But you'll get a lot of rhythm ones. See, here's this one. This is a perfect one. Looks like the market's crashing. Opportunity 1 doesn't happen, but we hit opportunity 2 right on the line, and away we go. And over and over and over again. And once you start seeing it crash like this, you can actually take a trade on the run up, run down, because it's right here actually. And if you don't see it coming back up, and you can see the slope of the baseline. Let's see if I can find another one. But that's what I'll do. And if you look at, for example, let's go to NQ here. I want to see if I can see any on NQ here. Okay, look at that one on an NQ yesterday. Broke down right on the line, away you go. Now, isn't that a beautiful trade? This is called the patient trading one. You just try to do it like you're doing your regular trading, but you're going to say, this is my optimum trade I really want, here or here, and away we go. And see, this one came back probably almost to the tick, away we go. And this is what we look for. And this one actually did work. See, it broke, came back, touched this one on the NASDAQ, and away you go. Now look at the risk versus reward on this. This is day trend, remember. Okay. See? Look at what our risk versus reward. I always talk about risk versus reward. We've had, let's go back in here, dealer. Pick. That's about $100 risk versus, let's see what risk reward would have been. If I can do it on this. See, look at, you only have to go down, or where is it? Somewhere within that zone to make that profit. But look at this, all the way down. It's great. Okay, now what I'm going to do is, let's go to the next indicator here. Showed you time scanner, showed you a few other ones. Now, one of my go-to ones that I showed you on the webinar is called, I'll show you market open, but let's do market maker right now. Ugh, even that happens. Oh, oh. Market maker. Every day, market maker will calculate a new zone of interest where they think the market makers are setting up their position. As you can see, that whole overnight session, even at 8 o'clock, 10 o'clock, it looks like it was crashing. See how it touched the line and then takes off? Then does a deeper retracement to the bottom of the zone of interest and takes off again. So if you know that zone of interest and you watch your, if you're doing order flow or whatever you think, you could say, okay, we've got to see what happens here. If she starts breaking down, then we can go to this zone of interest. As you can see with data series here, let's go check here. We have 15 days. Look how many days they liked this zone of interest. That's crazy. We have one, two, three, four, five, or let's say right here, 3 for sure. But every dotted line was a day, okay? So when the next day happens, this yellow line will turn dotted, as you can see here. So we know this was a really big area we have to watch. So bounce and reject, bounce and reject. See here, bounce and reject. Here, vibration, breakthrough, away we go. And where are they going to go? We probably don't have enough days of data. I bet you any money. Go like this. Instead of going 50, there's a 15. Let's go to 60 and see what happens. Okay, let's keep it going back. That one that we didn't know. There's another line. Bounce, reject. Here, breaking the cube, bounce, reverse. Bounce again, reverse. And you can see over and over, they will tap those lines. These are market makers where their liquidity is. This is where they want to go. They'll say, for example, okay, we break down here. Let's get through here. If we can get to the top, we'll get to the zone. They come back down. Just that current day. Let's drop down, grab some more position, and push it up. And they finish the day to where this resistance is, so they can offload, maximize their profits. I use this. This is my go-to now. I know that. On Friday, I wanted to do a show live trading, and I just got in a little late. I missed all this. This was my trade I took. I took this trade right here at 2 o'clock. I usually trade in the morning, but I was kind of lazy yesterday. So, but I knew this zone of interest, and I watched it, and I saw it vibrate, and I took this run all the way back up, and I cashed it out right on this yellow line. Yeah, it's an amazing indicator because I knew I had a big gap. Okay, alrighty, this is my baby. I love it now. This was my 6 months ago aha moment. Now, doing that as well. Let's go to market open. Alrighty. Market open will show, and look at that prior low again, so you use that correlation with the market maker. As you can see, this green bar right here And look how it went back to the price. They always do this. Market opens, starts crashing down. Gets to the prior close, vibrates, bounces up, breaks down. Hits this market actually punches through quite aggressively, but see how they're vibrating? Was that yesterday? So let's see if that was yesterday. Yes, it was. This was yesterday's. So they were vibrating again. Then they just punched all the way through from yesterday's low. At yesterday's low, let's go to back to the market maker. I said this was my zone of interest that I was really interested in, and you can see when you're in that zone of interest, see how it vibrates. I'm not talking just hitting just the perfect on the bottom of the tick here, but see how it vibrates, and they knew there was a lot of liquidity within this zone, so they're just chewing it all up and away they go. Getting in the zone of interest, chewing it up, away you go. Okay, so as you can see, there's a correlation of 1. If you were a trader, and let's add, let's have some fun here. Okay, I'll add that too, but let's go to time scanning. 1 minute chart, 5 minute analysis. I don't want as many signals. See if I have any. Last one was 4 o'clock, and the market was supposed to go down. It took a long time for it, and she broke from that point forward down, so that would have been the trade from there. There's not enough signals. You know why? It was that Christmas, New Year's, all that stuff. That's why I'm not getting enough signals. Okay, so, but what you're going to do is market open, away you go. Watch this, see if we can break through, away you go again. Comes back in, retest, away you go again, vibrating. But this is the one I was waiting for. So if you go over and over again, let's look at previous market opens. And focus. Ugh. Look at that ugly zone there. And as you can see as well, boom, tapping market open, back to market open, breaking through, hitting a lot of ugly zones of interest, popping through. Literally taps this market open, comes back down, right into the market maker previous high, and fires through. And this is what they do. So you know areas of interest. This is ugly because that was consolidation there. But, and plus we have 60 days of data there, so let's go like this. Drop down to 15. Keep it a little bit cleaner. And so, and this is what you do. And then what you do is you correlate it with your time scanner to see if you're on the right side of the trade. So if it was Sunday night, 16:05, I would look, and these times are too tight. So I want to look for bigger gaps. 4:45, 5:30, 5:30, 60. There's an hour move there, like maybe an hour move here. There's your 2 hour move and your hour move. These are the ones I'm more interested in. When you get really tight times, I don't care for. Like from 110 to 250, that's a 2 hour move. That's what I like. Now, one of the indicators I gave you guys for free, it's called a different letter, but it's the exact same indicator. It's just because it's in the investor's pack I put the underscore. Yours will have the letter F, I think, for free. I'm not sure. It's called the momentum panel. Boom. Okay, and I showed you the 618-1272 and how it works. Like this. And what I'm going to do is there's an option. Display historical targets. Okay? There we go. What you want to do is, in combination of everything, look for your support and resistance, those market maker lines, and see if we have any resistance. But the key is when the market maker changes, and you'll have to look at your patterns, what we try to do is to put our limit right here. This is our stop if you manage your risk versus reward, and this is your reward. So what you do is you get a limit, a profit target 1, depending how many contracts you have. Then when you entered on your limit, the profit target 2, 82. and then you can move your risk up. And so if you would have lost here, that's just the money you would have lost. And this is what we try to do. If we're following the trend properly, and you know your risk versus reward, this, let me see if this broke down here. Get in that trade. Actually, you did. Broke here, came back in, entered the way you want. Here, you possibly could have got stopped out here, I'm not sure. If you had it on the line or tick somewhere within that zone. Enter, profit. Once again, enter, profit. Where is the red on that one? There it is. Over and over again. And what you'll have to do is same thing here. Breaks in, enter the trade, profit return. This one never got in the trade. Missed it. See, just kept on going. This one almost entered the trade. Maybe it did here. I'm not sure. Over and over. And I wrote this. There, here, look at this one. Figure this one out. Entered, literally tap, away you went. There's another 30 ticks there. Actually, it runs really well now. See this one? Entered, came back, away you go. Literally got the target one before it reversed on. Over and over and over again. And that's how you use it. This is the one I get for free, and the reason why is I try to get you guys to become consistent because I don't know what kind of traders you guys are. And I just want you guys hopefully you can create extra revenue for yourselves. If you knew my story, it's I lost everything due to I got, I'll say, Bernie Madoff. That's the easiest way. It was I got identity theft on me in the worst way, and I wasn't day trading before then. So anytime we know we can take money from the big institutions, I'm happy. Let's just keep it at that. So, anyways, let me see. We're gonna do 2 more indicators, and then I'll do another one next time, because I know this is a lot of information for you guys if you don't know about a lot of these indicators. Yeah, this one I'll have to show you for sure. Volume bar. Oh, actually, what I'll do is I'm going to do volume bars for sure, and I'm going to get rid of this one for now. And also, I'm going to show you stop out for sure. Oh, and I'll show you square. Actually, I'll show you 3 today. Okay. And then I'll wrap this up because I gotta go to the airport and drop somebody else. So that's not a good rid of that one. Okay. High volume bar. A lot of high volume bars here. Actually, I'm going to add one more indicator because I said I love it. I'm going to go back to market maker. There we go. Let's see. Perfect. Okay. Interesting on the one. Let's go 5 minutes here. I just want to do a longer analysis here. Okay, perfect. Nice 10 o'clock at night. Volume. Okay, high volume bars. How I use high volume bars. All these colors here, the yellow and the green, right here and here, is average volume. I try to look at average volume. Once I started noticing on the volume start peaking really aggressively, I will paint it. I have 5 different colors, and you can change it accordingly. I'm not using it by numbers here, it's on algorithm here, volume percent. See, 1, 1.255, 2, 4. So the colors will start, I think, will be beige, olive, yellow, blue, and then maroon. That's how it goes. The higher the volume, we will change color. So blue is usually the main one. You could actually turn all the others off as long as you want blue and maroon. But what you do is once you start noticing a high candle bar, that's probably on this example why there was a line. But once you start seeing it peak out, we know this should be an area support resistance. Okay, this one punched through, but look how it came back. Let's see what the candle came back, what this previous candle was. When I go into the zones of interest, I call it. See this blue candle right here? Now I'm interested to get into the trade. I'll see it. Okay, she tapped out. We're just leaving the volume interest area. That's how I use it. I will use it as once I hit peaks. If I look at my my energies and everything, this is a peak. I said, okay, we know now to hit the top of the market. From there on the blue, they try to do a little bit more volume. It's beige, but kind of died off. Then they retested it. There's your retest of your double top, and away we go. Coming down, touching it. See how it touched this line? It wasn't blue, but there was increase of volume from this zone, and the reason why this previous blue, previous blue and this upper blue, see how this one touches and this one touches? So we know there's two areas of interest. We're getting in that zone of interest. Away we go again. And once it breaks through, then we start looking at the other side. And like I said, this was my trade yesterday. I saw the blue, then I saw the candle pattern. I wait till it breaks out the way I go. Now, what the stop out is, these stop outs, I try to think like a bank. We're retail traders, okay? And we're always taught on top of the swing, put your stop one tick above the swing, and away you go. And then guess what happens? Darn it, we get knocked out, and then they go. I bet you that's happened to you many times. So I said, okay, these are the swing lines that we are told to place. What I'll do is I'll watch to see the market makers go there, load up, and then I follow their direction to go down. So when they're coming down, I can use it as a target. So as you can see, tap, tap, target, bounce up, goes down, area of interest, I buy in. There was no resistance because these are all wiped out. Now I can see them loading up these lines, come back down, break up, possibly get an entry here, and away we go. And what you will notice, the longer the line, see this long line here, because now we know where there's previous swings that we were taught, taught to keep our position. Some longer time frame guys will still have their stop there. Maybe they put their order in at 8 o'clock, and they take a day off. They come back and says, "Darn it, I got knocked out." Maybe they had their trade here and they took this loss here. So what they'll do is they'll come down, knock out all this liquidity, get into our zone of interest, and look at right by the tick. It's our stop out line, a couple of ticks after to knock everybody out to reverse the trade. This is the stop out. This is what I use. And what you'll notice, see all these? Everybody was taught to put all these stops out. These were wiped out. The ones that are cut off are wiped out. Let's see, these guys would have still been valid. See how it came down, knocked out all these stops, cash out, reversal, knock, boom, done. They got the liquidity they wanted. Over and over and over again. And then I will teach you on Unirenko here. And this one's a little bit different. This is more of a kind of a strategy that I started looking into to try to keep it as simple as possible for risk and reward, because sometimes we have a difficult time to push or hit the trigger. And I noticed something on the investors pack that I forgot to put in, and I might have to bring it to you guys. But what we're going to do is I'm going to go to a Unirenko. Ooh, that was dumb. The data series here. That one. Okay. Unirenko. Oh, look at that. Boom, boom, boom. That would have been so just. Ugh, I hate when you do that. Okay, a Unirenko chart. I'm gonna put in a thing called Scalp Trader. Now, scalp trader, what you do, and I'm going to keep it on a sim account. So instead of using my live account, I'm going to put it on sim for now. And then there's 3 strategies. You can create your own strategy. This is why I designed it. There's called the scalping strategy, there's the baseline strategy, and the ATR strategy. And I'll put it on continuation versus zone, and I'll get into the zones later. I talked to you guys about the zones in the ATR fit. Okay? As soon as I hit apply, my computer crashed. Come on. Hopefully it will work. There we go. Okay, so I put in a couple of the baseline indicator, the ATR fib. You know, I kind of merged a few things together in order to use the system. And as you can see, right here, there's breakout, baseline, ATR, buy and sell. How you do this, and you actually don't need it on sim, but to see it, see this box right here? It will put buy and sell orders. Because the market's not live, this actually is supposed to be down here. But what it will do, I'll go a sell baseline. And as you can see, you put an order right here below the baseline for baseline breakout. Okay, if I go, let's open this up. Why are these bars so here? Oh, let's look at it better. Yeah, see, that's not right. That's okay. Oh, it's the end of the day. They're just playing that stupid game. Okay. Basically, this 6 stage should be right here, but because there's no live data, it's not positioning it properly. But let me just check something here. One more thing here on my indicator. If I did the update correctly. Gotta switch it to close. I think yours is fine. There we go. On close, not on each tick. I was trying to do something here. Okay, so a buy breakout is where this number 31044 is, or sell breakout is 3995. So while it's playing around and you feel worried about which direction it's going to go, it's saying, maybe we'll take it here and there. But what I do is I look at previous history of how it's trending. If I know it's only going this much and it's aggressive, I'm not going to go with sell breakout because you see there's a lot of numbers here, right? But in time, let's focus. That's 2 o'clock. Let's go for regular time. If I can get 5-10 ticks here or 5-10 ticks here, you know, 1-5, there's some pullback. You know, if we're consistently making those points, we can use it. And what I'll do is on the buy breakout, if you want, you can wait for the pullback on this little line and put your breakout to continuation. This is a deeper one right here, right? So I always say the 21 tick pullback. This is your 21 to 24 right here. This middle line. This is what I look for. I want to see if it gets to here before I take a trade. And what I use that for, of course, there we go. And I can show you on this example right now. The ATR, this is continuation. Zone 1, Zone 2, Zone 3. Okay? I sit on continuation, so if I waited for the pullback and I want to enter and continue, I go buy ATR. You see how it's right on that dotted line here? So if I use Zone 1, let's close this. On the baseline, my fib ATR strategy, if I use Zone 1, can I use Zone 2? Nope, can't use Zone 2 right now. And I'm using my baseline strategy. I can create any strategy I want to use, right? Okay, now if I go buy ATR, see how it's on this line? So, you know, you're watching it live and saying, okay, it feels right. Instead of me right-click this or, you know, Superdome and all that, it automatically puts it right at that level for you, and away you go. that's all I'll show you for you guys today. I mean, I've got I have to show more and more indicators. But if you guys, before I take off, are there any questions that you guys are interested in, or is my chat on? Let me just take a look here. Yeah, let me just check. Oh, there you go. Okay, no questions? Other than that, I'm signing off. You guys can put questions on the Discord. I will answer. I do have to go to the airport today, and I just want to just give you some information of how to do it. If you need templates, just ask me. And so there's a number of indicators that I showed you here today. Okay, guys, just make sure you pinpoint the trade safe, and I will be starting to go live Monday or if not Tuesday. I'll be doing live, so you can ask questions. Other than that, take care.